And today we're going to combine the above, very, very basic concepts, with candles, but we're going to have a very complete, very precise trading strategy. So let's look at pivot points. The black line down the middle of the screen there is around about lunchtime. Here's the pivot points before lunch. Now we can see which ones held. In fact, I've highlighted ones here that did hold. So that green dotted line going right through here, this is a pivot point. And we can see that that pivot point held before lunch, which also gives us a bit of a heads up. It's stronger now after lunch because we know it's already held. Now compare that, leaving the same chart up there, to a pivot point like this one, which was tested in the first part of the day and was unknown at the time. Tested it, pretty much broke straight through it. Up here, even later on after lunch, it's an untested pivot point. The market smashed straight through it. Pivot points just going back, where we can see they've already held, are adding a whole lot more value. So looking at that, this can start to already, and combining support and resistance factors with pivot points with the direction of the trend, even here we could start to say, looking back in hindsight, by the way, which I don't normally do, even here we could start to build a scenario. But for now, we're just focusing on, we want to be looking at pivot points which are strong and which are proven and which have been tested. Support and resistance, of course, is also more clear. So further into the session now, we know what's going on. We can see the highs and the lows that are formed. We can see flat levels that are formed, flat levels of support and resistance. And therefore, we know where price is likely to fail. We also know where price is likely to break through. If it does break through, where it's likely to continue. Trends and momentum are stronger. So this is still the same screenshot. We're just looking at one day's action. And here, further into the day, the further we go, the more established the trend comes. And some traders, in fact, new traders, beginner traders, often look at a trend and go, well, it's been going for too long, therefore it's likely to end soon. I look at it completely differently. I look at it and say, well, that's a really strong trend. I want to be a part of that trend. I don't care if I've just turned my screen on right now and I missed the whole first part of that. I'm excited because there's a good trend and there's good momentum. And that's what I want. I want momentum. And that only really comes after at least an hour, usually a little bit longer. But we want to see not just the market that's moving up, not just the market that's gapped up, but a market which has momentum, steady series of higher highs and higher lows for an uptrend, or a steady series of lower highs and lower lows for a downtrend. Now, the trend, I said this yesterday, I'll say it to those of you coming on my course on Monday, I'll say it to those of you who come on every single one of my courses later on. Probably every time you hear me talk, I'm going to say, if there's one thing which is absolutely crucial, absolutely critical to your trading success, which I reckon 95% of people out there calling themselves traders who are losing money are not focusing enough on this one thing, and that is the trend. Simple higher highs and higher lows like you see right there. Everybody thinks they know it. I've sat down with so many traders who know the definition. I know it, higher highs and higher lows. It's not enough. You need to absolutely own it, know it inside out. If you understand the trend, remember I said at the start, you can take that whole big chart pattern encyclopedia and throw it in the bin because it can be summarized by just a couple of things. A trend is every single continuation and reversal pattern you could ever need to know. Head and shoulders, double tops, double bottoms, ascending triangles, cup and handles, triple bottoms, you name it, whatever you want. Every single one of them. If you understand higher highs and higher lows for an uptrend, lower highs and lower lows for a downtrend, you know all those patterns. You don't need all that useless information where people just make up names to sell books. That's it. They don't make up names so you make more money. They make up names to sell you a book. That's the reason they do it. It's not going to help you make a profit, but by understanding the trend inside out, you will become a lot more profitable. You'll become a lot better trader. Moving averages as well. Now, we use a 10 and 20 and 50 period moving average. In fact, I normally have a 200 period moving average as well. Those will be simple moving averages. What we do is we're looking for a certain pattern on the averages, and we're looking for them to be fanning out. I'll show you that in a second on a chart. But then we're also looking not just at the pattern that the averages are displaying, but also how price is in relation to those averages. This will all make a lot more sense when we look at a chart. But the zone around the 10 and 20 period moving average, when the certain pattern we want is displayed on the averages, is what's going to be known as the buy zone in an uptrend and the sell zone in a downtrend. So, the pattern we're looking for. Here I've got the four averages on the chart. 10, 20, 50, 200. See how they are all rising on the left-hand side there. All averages rising, all heading in a similar direction, all in the correct order, i.e. the 10 above the 20 above the 50 above the 200. See on the downside over here, where we've got the 10, the 20, the 50, the 200, all declining on a similar angle. That means the short term, the medium term, the long term trends are all down. Now I've just highlighted by hand, by the way, that yellow highlighting is not anything I've done on TradeStation. It is simply I've highlighted what I consider to be the buy zone or the sell zone. And it's the zone around the 10 and 20 period moving average. This is not a precision point. A precision point will come from the candles. Every single strategy I have has a precise point to enter. But then people look at the averages and say to me, well, where would you enter? And the answer is you don't enter off them. They're just one of the ingredients. But what we want to see, we're looking for a strong trend, but then we're looking to see price pulling back into that buy zone in an uptrend or that sell zone in a downtrend. We want to be trading around that area. Now this, I could spend an hour talking about this one thing, and I probably will on Monday. But one thing that happens here, people say, but it won't always pull back. It has to pull back. If we could play this game all day if you wanted to, you could pick any chart, any time. You tell me the banking collapse 2008, I'll show you it pulling back into the sell zone. You show me the .com boom, I'll show you it pulling back into the buy zone. You show me any time when the markets have gone wild, there's always pullbacks, and it always pulls back into that area around the 10 and 20 period moving average. Now don't mistake always for meaning, well, this is the secret to wealth. It's not. It's just one aspect. It's one ingredient. But in a good, strong trend, price will pull back into the averages like that. And see here how it pulls back in. Pulls back in, moves away. Pulls in, moves away. Pulls in, moves away. Pulls in, moves away. We're looking, in fact, for little patterns like this. And I'll talk about the pattern on the candles in a minute. But we're looking for the uptrend, which is one of our things. So here the price was making higher highs and higher lows. And then our next thing is we're looking for it to pull back into the buy zone. So now we've got two of the ingredients for a trade. On the downside, we move down, we pull back. We move down, we pull back. We move down, we pull back. And as it pulls back, we won't trade every single pullback. We're looking for the high probability ones. So we're looking for a good, strong trend with really good momentum, followed by a pullback into a sensible place to buy or sell. And from there, we're going to look for a certain candle pattern in order to get our trade in the direction of the market. Here's the fanning pattern, looking at that same chart we've been looking at and stepping through. Here is a period, just a day. This was earlier in the year sometime. But there is the periods on the 2-minute chart where the averages were fanning. We want to trade the pullbacks of these moves. Here's the 5-minute chart where the averages were fanning. And we want to be trading the pullbacks of these moves as price pulls back in to the buy zone in an uptrend, the sell zone in a downtrend. We'll look at live screenshots, by the way, of both. So, we always want to have 2 time frames. Always. We want to add as much strength as we possibly can. Today I'm going to be talking about either the 1 and the 2 minute or the 2 and the 5 minute for the trading strategy. It doesn't really matter which, it's whichever time frame the trade's setting up in. This screenshot here happens to be the 2 and the 5 minute chart. But what we'll do as well is today, as I said, we're looking at index futures specifically, just to keep I've got an hour to speak, just to keep it a little bit focused. But you can do this exact same thing on currencies, on higher time frames. I wouldn't trade currencies, not spot currencies anyway, on 1 and 2 minute charts or even 2 and 5 minute charts. You'd focus more on kind of 15 and 30 minute charts perhaps. Or even higher, daily charts if you want to. But you can do this across time frames. It's not time frame specific, but today we will focus it quite specifically on low intraday trading on index futures.